Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com, is back, and he is predicting a huge move in this asset. We're not going to reveal what it is yet. We're going to get to that. Gareth, welcome back.
Hey, thank you, David, for having me. It's always a lot of fun to be here with you.
A lot of fun. Before we get into the markets, Gareth, last time you and I spoke, we played a little chart game and you won. You were actually up, I think, 45% or something ridiculous like that, which is not an easy feat for this game because I've played it a lot offline myself, and I'm usually in the red, which is why you're the trader and I'm the interviewer. But anyway, you had promised to donate to a charity of your choice, Wounded Warrior. Can you update us on that?
Yeah, absolutely. So last time we had that great chart game, and it was a lot of luck, let's be fair, but sometimes luck is what you need in this game. And then basically I had said that if I made money in it, then I would donate in my name. If I lost money, then I would donate in your name. So the charity was going to win either way. So you can see here on my screen, you can see I donated the $1,000 that I said I would to Wounded Warrior Project. And, listen, I mean, it's all about trying to give back to the heroes out there. I do my job, but they do a much harder job. And it's a pleasure to be able to give a little bit of money to them.
Just out of curiosity, why did you pick that charity in particular?
I just have an amazing amount of respect for people that can do that job. I mean, people say I have a hard job. I have nothing on them. I mean, they are just beyond everything I do, and they put their lives and their livelihood on the line and every day. And much respect to that.
All right. Well, I'm sure veterans all over the country would appreciate that. Thank you, Gareth. All right, let's start with U.S. equities, and we'll move on to other markets. As we always do, we start with macro. The S&P 500 has continued to climb higher. I know you and I have talked about a potential top for the S&P 500. It just doesn't look to me like it just keeps throttling up and up. Gareth, what's driving this? What's driving this bull rally?
Yeah, so it certainly is continuing to grind. And I think the last time we were on, I was talking about how you were likely going to push just above 4,000 on the S&P. And we're about, we're basically just north of 4,100 or so. And you can see here on the charts anyways, that we've now kind of come right up to this upper trend line. And I do think we still pull back off of this area. So I'm still kind of in that mode. You can see this wedge pattern is getting thinner and thinner and tighter. And at some point, I do think we break below that wedge pattern, and you will see a bigger sell-off. And that's kind of your trigger. For those of you guys that are watching out there for a bigger move down, watch for this lower trend line here to break. If price gets below there, you should see kind of a little bit of a vacuum pocket where the markets really start to move lower. So I'm still in that camp that we should see a rollover, but the light volume, the optimism over reopening is certainly keeping things floating for now.
Earnings season is kicking in. So what are you expecting this season?
Yeah, so I think it's going to create some good volatility. Volatility on the VIX has really declined recently. We saw Netflix miss on earnings, as you could say that they really pulled forward a lot of their subscribers because of the pandemic and people being locked at home. I'm really curious next week to start looking at the Apples, the Amazons, the Googles. Those are the ones that are going to drive the market overall. And I think we have to also just keep an eye on interest rates. I mean, no one's talking about interest rates anymore. They've retraced from 1.75% on the 10-year to about 1.58. I think there could still be a little bit more downside, but you're getting in a realm where you're consolidating for, in my opinion, the next push to 2%. And that would also put pressure on the market.
Yeah, what's interesting is the fact that analysts are suspecting that a lot of these are already priced in. I'm just reading this report from CNBC this morning. 67 out of the S&P 500 companies have already reported earnings, and of those, 67 of those that have reported already have already beat their earnings estimates, and it's done nothing to boost their prices, their stock prices.
Yeah.
As we see today, the S&P 500 right now, as we're speaking, is actually down about 40 basis points. So, you can expect a positive earnings season, but for some reason, the stocks are just not reflecting that.
Yeah, and that really comes down to the fact that stocks have rallied so much. So you had these stocks during the pandemic or during the height of the pandemic 6 months ago or so, where their earnings were just, no one thought they were going to be any good. Oh, this pandemic's just crushing. So they had very low bars of expectation. But now you've got this big reopening, and you can talk to anyone, and everyone out there saying, oh, this is going to be such an epic reopening, and the stock prices have already gone up to reflect that. So now, even with these beats, people are saying, well, we kind of knew that was going to happen, so there's no reason to buy. In fact, maybe a little profit taking in store.
What would need to hit the markets to really surprise equity investors to the upside?
Oh man, that's to the upside. That's a tricky one because everyone's assuming everything's going to be, roses at this point. I mean, I would think that if inflation numbers would stay kind of under expectations or at expectations, I think that's the big kicker right now, where with all this money being thrown at the market from the Fed and the government, people are now assuming you're going to have this big pop in inflation. If we can see those numbers really be transitory, meaning that we get a little pop and then it kind of backs off, that would be really positive for equities, I think. That's the one possibility. I don't think that's going to happen, but I've been wrong before, and I'll be wrong again at some point.
I remember having this discussion last year with a couple of my investor buddies, yeah, last year the whole theme was monetary stimulus really driving the markets. Well, you can argue whether or not that's had any impact in the markets, but it seemed like quantitative easing back then in 2020 had a lot more significant impact on investor psyche than it does today. There's only so much, first of all, rates are already near zero. There's only so much they can do with the Fed funds rate. And then we've already seen unprecedented monetary stimulus. How much more can they print to excite the markets?
Yeah, and then
that's a rhetorical
question,
by the way.
I mean, they can always print more, right? But the question is, it's diminishing returns. So, at some point, the market gets used to 100 billion a month or 120 billion a month. And if they go to 150, the question is, do the negatives outweigh the positives? I mean, does that extra amount cause a bigger reaction in the inflation side of things versus the stimulus that it gives? And that's my big concern, is that, you're essentially getting the market used to these drugs, which are the printing of money and pushing money into the system. And the market always wants more and bigger and bigger. And at some point, you can't go bigger forever when inflation starts rearing its ugly head.
One thing that's tied to inflation expectations, at least, is the 10-year yield, or nominal yields for bonds. And actually, I'm looking at the 10-year yield. It's come down from its highs a couple of weeks ago. People were expecting it to normalize. Is this what we're seeing right now? Is this, well, normalize is a subjective word. Historically speaking, it's still low. Normalized from a couple of months ago because we had that huge spike upwards. Where do you see yields headed, Gareth?
So I do still see yields heading higher. And I think you have to think of it in the technical terms. When you have a move in a stock where a stock is trading at $1 and it runs up to $1.75, so you had yields basically at 1% hovering, and then you had this epic move to 1.75, you naturally are going to get this check back where you kind of consolidate, you pull back, you create a bull flag essentially. And it seems like that's exactly what's going on. So until something were to change about that, I'm in expectations of a move up above 2%. I don't know how much above 2% before the Fed tries to lock it down, but I do think we still have that. And if you look at the chart, it's creating that beautiful bull flag that, I trade often on the long side.
And that could be a bearish case for equities, right?
Absolutely. Yeah. I mean, especially for technology, the high risk, high growth names where their valuations are pulling forward, 10 years or 5 years or 3 years, that would be a very big negative for tech, especially. Value might survive and do okay, though.
Let's talk about equity markets abroad, in particular the Shanghai Composite. You've prepared a chart for us, Gareth, and you have an interesting story to tell. Let's hear it.
Yeah. So on the Shanghai Index or Composite, I'm really looking at it a mirror image of Bitcoin prior to its major move to the upside. So I'll even zoom in on this to get us a little clearer move. So this is the Bitcoin monthly chart prior to the breakout. And you can clearly see here was your 2017 high, your subsequent highs afterwards here and here. So 1, 2, and 3. And then we all know what happened with Bitcoin, where it just took off to the races here and just had this monstrous move to the upside all the way above 60,000. And basically, if you look at the 20,000 high, you went 3 times higher than that high. And if you look at this chart, that same pattern, that exact same pattern is occurring on the Shanghai Composite. So if we go to the Shanghai Composite, look at the exact complementary chart setup here. The perfect thing, 1, 2, 3. And so in my mind, I was saying, you know what, these are very similar in many ways, not just their charts. So the idea here for me, I was saying, okay, well, what are other similarities? Well, Bitcoin's relatively a new market in many ways, and so is the Shanghai Composite. So they're both a little bit more on the speculative side. They're both something that you don't have a lot of money invested in, especially prior to the breakout. And the idea here is that you could be seeing the exact same chart setup in the Shanghai as you did in Bitcoin, And that could result in this epic move to the upside where the Shanghai index literally triples the high pivot, just like Bitcoin at 6,400. So you could be talking about, 18 to 20,000 easily on the Shanghai. Now, granted, this is a longer term call. This is a macro call. So we're talking about maybe a move over the next 2 to 3 years. But I do think this is something you want to keep an eye on. And I was thinking, and then I'll just keep it short here. I was just basically thinking, well, what would be the trigger here? And we know that the US government has said that the companies in China have to conform to accounting standards in the US within 3 years, or they risk getting delisted. And I was thinking, it's in China's interest to do this. And if you get more transparency and more openness in China, then you would see a massive influx of capital into their markets. And this could absolutely come out to play out.
This is really interesting how you've compared the Shanghai Composite to Bitcoin. And I'm just going to flip this around here and talk about what happened after. I don't know if you remembered in 2014 and 2015, the Shanghai A shares actually did rally about 150% in 2014. There was an A shares bubble in China. I remember my friends in China were all just buying stocks left and right. And of course, if the cab driver was telling you to buy stocks, that's usually when there's a bubble. Of course, afterward it crashed. So you're comparing the price pattern to Bitcoin. I'm just wondering then if the Shanghai Composite Index now is showing the same signs that Bitcoin did in its early days in 2021 before the huge rally, does that mean that Bitcoin is currently in a bubble and could pop as the Shanghai did in 2015?
Yeah. That's a great question, David. And I think just to point out here is look at the big move you did have when the Shanghai had that bubble over here, and look at the collapse. And if you look at Bitcoin in 2017, it's almost identical in terms of that collapse as well. And so if we turn over to Bitcoin, I do actually think you have at least, it's hard to call it a bubble, but at the same time, I do think you have a situation where you're going to look for significant downside here. And this is actually the wrong chart. Let me bring up the right chart on this. But basically, you have a scenario here where Bitcoin is looking to potentially have a collapse below 53,000. All right. So you're looking at a collapse below 53,000 on Bitcoin. And that actually could take it down as low as 20 to 25,000, according to my charting. So again, I don't have that chart readily available, but I would definitely show it next time for Bitcoin. But again, you're looking at a potential break of 53,000 for a day or two, and then look for a decline to as low as 20,000 on Bitcoin.
I'm sorry I spoiled the mood now, Gareth. This is supposed to be a report on a bullish story, not a collapse, but here we are.
Oh, sorry.
I kind of once again, I've turned the tables. All right, Gareth, let's go back. We're going to talk about Bitcoin in just a second. I want to go back to the Shanghai Composite. Are there particular equity plays that you would consider, or are you just going to buy the index then?
No, there's definitely some opportunities here in the US. So, you generally want to focus on names that are the best of breed. So whether it's Alibaba or Baidu, some of the smaller ones like IQ has been really discounted recently. Here's the Alibaba chart. And if you go out on the chart, you can see it's been in a nice uptrend. I think there could be a little bit more downside. But if you get that breakout on the Shanghai, then look for that epic move up, and it should take Baidu up with it. And I was just thinking about Baidu logically, and I was saying to myself, okay, well, Amazon has, this country on lockdown in terms of 300 plus million people, 350, 360 million people. If you look at the opportunity for Alibaba in China, it's obviously in the billions. So it makes sense that if you look at their market caps and over time, they're going to be able to maximize and really grow bigger than Amazon in terms of market cap when they cater to their own country. So I think that's one way to go. I was mentioning IQ. IQ is doing well today, but you can clearly see this got caught in the Archegos capital collapse. It was trading above 28 down to 15. Now it's starting to bounce. I think these are great opportunities for investors to be in because of their current discounts, because of no fault of their own, basically because of a hedge fund blow up. And I love this channel that you have this IQ in. It's basically, you can see it just basically trades in this channel up and down. And so the idea is, simply put, just buy the low end of that channel and at least get some sort of move back, maybe as high as 28 over the next even, 3 to 6 months before even a bigger breakout maybe takes you to the 45 level. But I'm very bullish on the Chinese names. I think, again, coming out of this, the market, the the capital in the US markets, when we get out of this pandemic and after a 6-month reopening phase, it's going to look for somewhere else to go. And I do think China could be that area. And I also think China relations over time will start to improve. I think that they've been really hindered here between the Trump administration and the Biden administration. But I do think that negotiations will continue to get things on better course.
Okay, let's close the conversation off today with cryptocurrencies. You were talking about a potential Bitcoin price collapse down to much lower levels, below $30,000 perhaps. I've spoken to some other people who have agreed with you on that point, by the way, Gareth. Of course, there are other people who don't agree and think it's going to hit $100,000 before any sort of retracement, but the price levels are difficult. Tops and bottoms are difficult to gauge in any market. I'm just wondering now, Gareth, does this apply to any other coins in the crypto space, or is it predominantly Bitcoin that's in the bubble right now?
No, it applies to pretty much everything. I mean, I think Ether is probably one of the stronger ones that continues to actually be near the highs, even with Bitcoin's recent pullback. But I still think, again, if you're going to get that type of drawdown in Bitcoin, you're going to see all the cryptocurrencies take a hit. And a lot of the smaller ones, the Doge coins, for instance, they could lose a lot more percentage-wise even than Bitcoin. And remember, historically, Bitcoin, it's kind of like a once a year, once every couple of years type deal where it loses 50% of its value. So, a lot of investors out there, they haven't experienced that because they're new investors in the cryptocurrency world. But if you look at the chart, it's just, it's up 200%, down 50%, up 500%. It's just the way it's traded. So for me, I'm a chartist, right? So I was in Bitcoin calling for that breakout that we had that I showed on that chart. I wrote it to about 20,000 and then I got out because that was a double top and it just blew through. So I'll be the first to admit that, from my swing trade side, I missed out on a huge move. But again, patiently waiting, disciplined as a trader, I'm going to wait for that pullback to buy. And I'll be waiting. I love Bitcoin long term. There's no doubt about it. I love it long term. Just short term, it needs to pull back.
All right, that's a great message. Any other coins that you would potentially be looking at right now for a entry point? You mentioned Ether.
Yeah, I think basically take best of breed. I'm a big fan of best of breed because this space is so new. So you're going to have just like the .coms. I mean, if you invested in 10 .coms back in the late 90s and you were an Amazon is all you needed, but the other ones, a majority of them went bust. So just focus on best of breed if you're a long-term investor. I don't know what a Dogecoin will do or some of these smaller ones, even though Dogecoin is pretty darn big now. But the Bitcoins, the Ethers, the Litecoins, the Cardanos, those names should do very, very well over the longer term.
Dogecoin, such amazing, much wow, such money. Yeah. If you're familiar with that meme, you'll know what I'm talking about. Thank you so much, Gareth, for coming on the show today. Excellent talk as always. Thank you.
Thank you so much, David. It's as always a pleasure.
Pleasure's all mine. And thank you for watching Kitco News. I'm David Lin. Stay tuned for more.